Welcome to ECNTRADE daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, since the Australian dollar recaptured renewed momentum as the US dollar index, which measures the greenback strength against a basket of 6 major currencies, slips slightly lower to 102.10, the market has found renewed strength to now look towards the region of 67 cents. However, there is much concern that we may see another rejection from that 67.35 level. A key point, and also with buckling technicals, does give some indication that we may see another down test, which could see a move to 66.65 and still holding the base around 65.90. Meanwhile, in today's economic release, inflation continues to slow in Australia following the consumer price index, which fell more than expected to around an 8-month low in February, after the pace comes in at 6.8% last month, with 7.2 forecast missed, and the previous January release was at 7.4. So a good indication that inflation has somewhat eased. Now the question is, what would the RBA do as the cash rate holds around 3.6%? Many economists do expect to see a 25 basis point rate hike. However, there is much questions after today's CPI release that may see the RBA put rates on hold or pause. Moving on to the euro, the market still holds a slightly firmer stance, but towards 108.60-65 could see a rejection and see the US dollar index rebound off the lows of 102 and therefore put the market back on focus to 107.35 and reassess. The dollar yen, the market's still holding firm as this RSI is strengthening with bullish divergence, a break through the midway point. I feel that we are on target to see the challenge of 132.1030 and reassess from there, as we could actually see a stretch up towards 134. The dollar, still somewhat questionable of a rebound, has put a little bit of a stop to the British pound as it exhibits recently demand in the last 2 days is now weakening, and with the technicals buckle in, that is, we could see the market pull back to 122.45 and the base holding at 121.85. Gold is somewhat weaker after the recent rebound and still maintains a potential slide towards 1,935 as the initial target. As the technicals are breaking down, then I feel a little upside scope is seen with around 1,778 to 79 as a short-term cap. Still like the move to the upside for oil and looking towards the region of 74, 30, 40 as an initial target and reassess. We are a little bit overbought, so we could see a correction from there. Well, that's a wrap for the day. Thank you very much for joining me. And as always, look out for the intraday report. I hope you enjoy the rest of the day.